All righty, traders. Happy FOMC day. Hope everybody's having a great trading session. And I know it's just started for a lot of you guys and gals, but we're gonna get through the FOMC. Well, actually, the key levels ahead of the FOMC here in a moment. I just want to mention that we will be also meeting you and I, right? We're going to be meeting here ahead of the FOMC on the daily roundup. So just, just keep that in mind today. We will be talking via this webinar just a few hours from now. So this isn't the last time you're gonna hear from me. And so, will my opinions change between now and the FOMC? Probably not. Right. So anyway. Jayden says, Blake, sincerely, thank you for the S&P levels yesterday. You're welcome. You know what? Let's go ahead and talk about that. I know I mentioned it on the FACE webinar, but this really, if you ask me today, and this is for today, not for every other day. This is just for today. This is going to be your line in the sand. This 43.75 that we talked about yesterday. Let's mark that down again. 43.75. This is now key. What I mean by that is this now has to hold, because and I will be the first one to admit to you that I am not the best Fed watcher. I'm slow to respond because I'm slow to kind of digest what the Fed has said. So I'm not the best Fed watcher. When I say Fed watcher, I mean by the day of. I'm really not. There are better people that can make decisions quicker than me on Fed day. So do you know what I rely on? I rely on price action, and that's what's always served me the best, because I know, like, when you're watching the markets, no matter what the Fed says, I know that as long as yesterday's lows hold, and this is obviously just for today, things could change the next Fed meeting, but as long as yesterday's lows hold, that means the Fed is not that dovish or not that hawkish. If for some reason we break through those lows, that means the Fed is hawkish and the market is taking note. Really, that's all what it boils down to. You know what I mean? So the great news about what happened yesterday, I'm not saying, oh, Blake, oh, what a fantastic call or anything like that. No. What was so important about what happened yesterday is yesterday really told us where support is. And now if we break through this level, that is bearish. And matter of fact, let me do this really quick. Now I have an alarm set, and if it breaks through that low, things will change for me. Like, if we break through that low today, I will automatically start buying dollars. Now, your next question is, well, Blake, where are you going to buy dollars at? Well, it's easy for me. I'm going to buy dollars against every commodity currency that I don't own. So, if I'm not already short the Aussie, I'll be short the Aussie. If I'm not already short the Kiwi, I'll be short the Kiwi. Well, I'll probably, pick one or two more aside from being long the US dollar, Norwegian krona. Sorry. I still have a little bit of dollar Canadian exposure, not much, but it's there, because I know we're just kind of perched on this channel. But anyway, if we break lower, that's what my main focus is going to be. Let's buy dollars against commodity type of currencies, because they're going to perform the best. Dollar Mexican peso, got to be long, right? You got to be long the dollar Mexican peso if stocks start to roll over. So anyway, let's get through these charts. Let's go through them. Speaking of the peso, since we're here, so support right now, this trend line support obviously comes in at 1990, but as you guys know, big support is at 1770. That's like really key for me. 1970, I meant to say. Oops. I'm going to do this. Just put it in there. Okay. All right. Resistance 2025. You could write in 2030 as well. You know, 2025 is right here. Or you write 2035, which is a 618. 2030 is this horizontal trend line. I'd be more excited if we broke through this resistance, because then I know we're making higher highs. You know what I mean? So, okay. Let's go into the Aussie, because I'm so irritated. I've had orders to sell Aussie dollars above 74 cents for like all week long, and I'm just so irritated that, you know, the inflation data couldn't get it up there. Stocks at all-time highs can't get it up there. I'm just irritated that I'm just not getting short the Aussie right now. And if you're short, so this is kind of how you think about it, right? If you're, excuse me, sorry. If you're tired, I'm tired. I got up extra early this morning to have a meeting with some folks in Australia, because it is 9 o'clock at night there, and it was 8:30 at night there, and it was 3:30 in the morning here, and it was like 1:30 p.m. in Greece. So it's the only time that we could all meet. So I had to get up extra early this morning to do that meeting, and I'm tired. It's it's tired just because that extra half an hour, believe it or not, at 3 o'clock in the morning hour does make a big difference. Anyway, the reason why I'm saying all this is because the Aussie, I've been trying to sell this damn thing on any spike higher towards 74 cents. I just have not been able to get it. And I'm irritated because I know that a breakthrough this support is just gonna flush. I mean, it is, we break through this. This is a 161% extension, right, of this move. We've known that. We've known that we've known that for weeks. We actually wrote down that 62.90 level of support, or 73 cent level of support. We had it at 72.90, whatever it is. We knew that that's key, and it's been key. And the problem is if we break through it, it's just not going to hold. So we got to write that number down today, unfortunately, because, or 72.90, because it's the spike low. We've got to write it down, and I'll write it again here. 74.20 is resistance. Matter of fact, it's probably like 74.10, because this is a descending trend line. So, excuse me, this is a descending trend line. So now it's really at 74.10 by the time we get up there. 74 cents. Actually, I'll just keep it at 74 cents now. So that's got to hold for bears. But as long as that holds, you can't even rally with risk. That's frightening. I try to put myself in the shoes of somebody would be opposite. So I don't have any exposure in the Aussie right now, but I try to think about it this way. If I was bearish, how would I feel? I'd feel pretty good, right? Like if I was short, I'd be like, yeah, this thing can't even rally. And then if I was long, I would be crapping my pants, right? So then it helps you understand like the mentality of the market at that moment. And that's, what I'm doing here with the Aussie. Kiwi. I mean, Kiwi can't even get above 70 cents. We know that's key. It's still key. I would write down 69.20, but we're almost there. So we have to actually write 68.80 now. That's critical. I think every bull thinks that that's not going to break. Anybody who's bullish is like, there's no way that's going to break. You know why they're saying that? Hey, it was a false breakdown. False breakdown, that level shouldn't be touched again. So if you're bullish, you're like, that should, my stops, if I was bullish and I was long Kiwi, my stops would be below those lows. I'm not long Kiwi. I'm just saying if I was long Kiwi right now, that's where my stops would be. So why is that important? Because you know what the mentality is of the market. Hey, this level shouldn't be touched now. Okay. Dollar Canadian. Like I said, I got some exposure here. I just don't want it to break below 125.20 because if that goes, then we're going to test 124.70. You guys already know that. So let's write down 125. We might have had it as 25.25 yesterday. I think I did. So it doesn't really matter. It's all the same area. Resistance 126.10. That's a 24% retracement. So we might spike up to 126.70. So I'm going to write down 126.10, 126.70. It's still bullish. I know it hasn't been acting the best, but it's still bullish while we're above this channel support right here. Swissy. How come I have a feeling we're doing this? I may be wrong, but let's ignore that for now. I'm still gonna write down 91 cents to 50. Remember, it's a 50% retracement in this, so 91 cents and now 92.10. For those of you that are trading it, hopefully none of you guys are trading this right now because it is just, I mean, it's got no direction at the moment. Okay. US dollar Norway, support 877, resistance 895. Still bullish. Oops. I am long. And, you know, if you're long, just remember, you know, you keep your stops around here, but we break through 870 and it is good night for the dollar Norwegian krona. We break through that, it's gone. Dollar Mex, we already talked about it. Dollar yen. Curtis says, I think if the Kiwi was bullish, that move back above the support would really have gone further. Depends on the Fed, I suppose. Yeah, I think the one thing about the Kiwi is you can see how well it's acting. Just like look at the Aussie New Zealand, right? I'm not bullish the Kiwi. I'm just more neutral at the moment. I think the RBNZ is way more way less accommodative than the RBA. That's the best way to say it. So I'm not bullish, but I think there's a lot of let me take a step back. Again, Curtis, the whole process and the reason why I go through that process of, you know, if I was bullish, this, that, and the other thing, it is really just to kind of keep the just to understand what the market might be thinking. Copper's on its lows, by the way. But more importantly, it is really just to help you understand what the thinking that some traders would be, how they'd be feeling right now. There are a lot of Kiwi bulls out there. And the reason why is because of the central bank. right? There are a lot of people that think that, you know, the RBNZ is one of the first to exit, you know, extreme monetary policy. They've gone pretty much unscathed regarding COVID. They're going to be the first to bounce back. You know, so there's a lot of people trying to play the Kiwi on the long side. I think. I mean, and personally, I've been expressing my dollar bullish views against commodity currencies, not in the Kiwi. I've been expressing it in the Aussie and the Canadian and in Norway, but not the Kiwi. I even missed my opportunity at 70 cents. I knew I should have sold it up there and I didn't, because I'm like, well, if I'm going to focus on commodity currencies on the short side, I'd rather not be in one where we do have a more hawkish central bank, right? So wasn't the right choice, because obviously a short at 70 cents would have been ideal, but you get what I'm saying here. Sorry, continuing to work through. All right, let's go over to the euro and the sterling. So you notice I changed my chart. I had it as a I had it as a wedge for days through, you know, as we had the ECB and everything else. Yesterday, I changed it to a channel. Why? It's because it's the FOMC, and Ryan's analysis was spot on. Ryan Littlestone's analysis is spot on. He said, you know, we'll probably end up coming out of the ECB and just being sideways till the Fed. And that is exactly what's happened. Now, the good news is we know where the breakout points for the euro are right here. 38% retracement, 118.40. I know we already wrote down these numbers yesterday, and then 117.50. So we know where the breakout points are. That's the good news. The bad news is we haven't broken out yet. That's the bad news. 118.40. I'm still I still have to keep a bearish bias though. I have to. Until we start like really we come out of this channel and, you know, start making some significant higher highs and higher lows. I'm just not, I can't change that yet. Sterling, on the other hand, I mean, trying to get short up here. So 139.10. Let's imagine a world. Let's imagine a world that the Fed is dovish. Stelios, can you imagine a world
where the Fed is not dovish?
Where the Fed is dovish, and you see unicorns and rainbows and stocks at all-time highs? Could you see a world like that?
You mean apart from the current world?
Oh, we're living in the world. Yes, we're living in that world, right? We are. We're living in that world. Sorry, I'm going to go ahead and kill my video. I was trying to get the rainbows and unicorns and life.
Really nicely done, actually. Nice. I enjoyed that.
You guys see my hair? Well, okay. Sorry. So anyway, let's imagine we live in that world, which we do. So if the Fed continues to be dovish, man, the sterling false breakdown, we get above this 139 and change, we should trade up to 140, because, you know, people are caught short here. So I don't necessarily think that's the trade you need to do at the moment. I'm just saying, if the Fed is really dovish and stocks hit all-time highs, the cable should go. It should, right? So I just want to point that out. And then support is going to be, I know we had this written down right here. Let's write this down. I'm glad you got that, Stelios. I wasn't sure if you were going to get that or not.
Come on, man. I'm not Steve. Give me some credit.
I wasn't calling you stupid. I wasn't saying that. I just wasn't sure if you're going to get my joke, the joke there that I had. You know?
Yeah.
All right. Okay, continuing on. dollar yen. And by the way, I do hear what you're saying as far as your argument with the Fed. And look, if I didn't agree with you, I wouldn't be long, some dollars right now with like the dollar Norway. I mean,
I personally think that the most likely scenario is nothing happens and my trade kind of drips away a little bit of money.
I'm with
and
you.
I'm fine with that. But what if?
What if, right? Yeah. And sometimes you gotta put some money on the what if. And I've got that's why I was buying the Norway last week, and the US dollar Norwegian krona. I'm sorry. Notice, let's talk about the dollar yen. I know some of you bought it. I actually know several of you bought the dollar yen yesterday. If I'm already out. So I took the 40 some odd pips and just ran with it. But here's the thing. I want to show you guys something that's pretty interesting here. 618 retracement. So what that's telling you is the dollar yen is stalling right at 618 retracements, which makes it now a symmetrical triangle. So that means the breakout point is here at 110.25. Breakdown point is going to be right here at 109. Let's just call it 109.75. So there you go. Sorry. Language, kids. Girls, earmuffs, please. I'm talking to your girls, Stell. Earmuffs.
They're in a different room.
Blake's got a hot mic. Careful. Just kidding. 110.25. Range. Breakout levels. Great. Dollar index. By the way, this is the channel that we've been following. Little false breakdown yesterday, right? Dollar index. The dollar index probed below channel support ahead of the FOMC today, but we closed just above the 92.50 level, which may keep us neutral. Like, a little false breakdown there. It's got, the shorts running for cover a little bit, but this is actually really key now. So we can look at that and say, all right, if we break below 92.30, the dollar index is going to have some problems. Okay. I'm going to keep us in range going into the FOMC because let's face it, it's the FOMC. Resistance today would be 92.85 and then 93.20. So okay. I'm going to keep us in range just because it's FOMC day. That's the only reason why, guys. Oh, stocks are seeing a little sound. Remember, what else, Stelios, what we have on top of all of this FOMC stuff?
What, the debt ceiling?
That too, I guess. But we have we have end of month flows as well. So that's, I think we've seen evidence of that the last 2 days. Basically for the last 48 hours, we've seen some flows get pushed through the market right around the London fix. So, which the London fix, by the way, is in an hour and 20 minutes. So just keep that in mind too. It's just, you're just seeing these jolts in direction. So here's the other thing I need to make sure that I talk about is, man, these precious metals are just trading so heavy. I mean, look at silver. We broke below that 24.80. So now support 23.70. Resistance still is right here. 25.50. I think if we ever broke above 25.50, or if we ever do, or let me rephrase that. We will at some point. But if we break 25.50 today, that would be bullish. But right now, I want to flip it to bearish, but it's FOMC day, so I'm going to avoid that for now. But next support is really 23.70, and silver looks like crap. I know I've been saying that a lot recently, but it really is. I mean, it's trading so heavy. And same with gold. I mean, look at gold. Can't get out of its own way. What inflation? You see inflation? Somebody's got to see it somewhere, because if they did, they'd be buying gold to hedge themselves. Maybe you guys would disagree and say gold's not so much of an inflation hedge anymore, but I still think that old rules apply. How else do you protect yourself? You know, what are other means to protect yourself with inflation? There are other things to do, but gold would be part of that mix. So 18, and I know Stelios probably has something to say about it, but I'll let him talk about that here in just a second. I just need to write down these numbers, because as you guys know, somebody was getting all excited about Bitcoin on our webinar, said, "Oh, Blake, you haven't even talked about Bitcoin and how bullish it is." And it's like, it's not. It's not. Till we get above really 44,000, which is, oops, that's the 200-day moving average. I can't get bullish. Stelios is super bullish.
Hey, in the long run, maybe. Actually, no, I'm not. I don't know. I don't understand it enough to have an opinion.
Yeah. You know what? I think the price action is just range bound right now. Get above the 200-day moving average, and I might think we rip to like 50,000 or something. But anyway, there's the bias chart. It's finished. So, Stel, how are you feeling about the Fed today? I mean, I kind of know what you're feeling. So, do you want to elaborate at all?
Well, depends on what the Fed will do today, and obviously nobody knows what they're going to do apart from them. But like I said on FA.C.E, I always like it when the market gets really, really one-sided, and when everybody expects nothing from the Fed. And I think we can all rule out a more dovish shift. I mean, what reason would they have? The only reason is a Delta variant, and that we have seen from countries that are well vaccinated, that yes, you get more cases, but the death rate is a lot lower. Now, we saw that in the UK. I think in the US, it's looking the same. I'm not saying that we should ignore it, but I think this wave has nothing to do with the other waves. So for that reason, I think the Fed, I don't want to say will not, but they really should not be too bothered about the Delta variant. What they should be bothered about is rising inflation, rising wages, rising costs everywhere. You're seeing it in the stores. I have friends, and you, Blake, who live in the US, and it's coming up everywhere. Here in Greece as well, we're seeing inflation, and you're seeing a lot of stealth inflation. The same price for less product. So it's something that is a problem. Is it transitory? Well, we've already had a few months of this, and how much longer until you say it's not transitory anymore? For that reason, I am short treasuries via the TBT ETF, which is a 2 times leveraged short 20-year treasury ETF, and excuse me. And I want to play this as just a punt, and I rarely punt, but this one I really like the risk reward, and I think it's the most likely scenario is probably that we're going to go sideways. Maybe the position is going to lose a little bit. I'm going to cut it and move on to the next one. But if they are more hawkish, if they give us any kind of timeline, I know we're waiting for Jackson Hole, not Jackson's Hole.
I'm waiting for Jackson's Hole too.
Jackson Hole in August. But you know what? They have to give us some guidance before they do anything. The market's kind of thinking maybe end of this year they're going to do something. Well, we're in July. The end of the year is not that far. It's they could easily say something that's on the hawkish side, and that's why I like this trade. There's also, what can they do? What can they change? They could talk about tapering. They could talk about adjusting the composition of its purchases. So, for example, they could replace agency bonds with treasuries. There's a million things they can do. So, I'm waiting to see what they're going to say. But for this particular meeting, I've taken a trade, and me, I don't usually do this, but no. it just looked like a very nice risk reward trade. Excuse me. I have this really bad cold. I don't know. It's not COVID. We got tested, but
You know,
anyway,
my son's got a little bit of a cold too.
Yeah. With COVID, we've forgotten that there's all these other viruses around, right?
Yeah, right. It's like if you're sick, it's automatically the default. Oh, you must have COVID. Well,
and another reason why I like this trade is for me personally, because I'm already long some silver, some gold, some gold and silver miners. I have just over a third of the position I want to have, so I'm going to add quite a bit more. In the case that they are hawkish and we're going to see a dump in metals, a dump in all these things, we're going to see the dollar rallying. I want to have a little bit of a hedge in my hands just in case that happens. I want to add more silver. I'm waiting probably for a 23 handle. I'm going to go with price action. And gold, I think we could easily see those lows at 1680 again. I think easily, maybe not easily, but I think we could. So that's the level I'm waiting for in gold, and I have some corresponding levels in miners as well. But I'm keeping some powder dry. I want to add more, and if we do get a hawkish Fed and things start moving, then I'm gonna take profits on my short treasuries, because you know how this is like. Ryan's talked about this on FACE. They could dump and then they just rally back up. So I think this trade might be closed today or tomorrow morning. So I'm just gonna see how it goes.
Okay, yeah, that makes sense.
And we talked about gold and silver, and I agree with you, Blake. You've been talking about this for a while when we were not believing it that much, that Bitcoin and cryptos are taking a little bit of the shine of metals, and you have all these, especially younger generations, who are piling into that. And you're seeing institutional interest as well. So, it's the cryptocurrency is what, over $1 trillion now, isn't it again? So
yeah,
that's a pretty big chunk. And, it's total market capitalization. Last time I checked was just over 10 trillion. So it's 10% of gold's market cap. It's not negligible anymore. So as long as cryptos look like they're still holding, I think gold and silver are going to maybe struggle a little bit more. So I'm watching cryptos as well. And then the dollar, we talked about the dollar, you talked about the pairs. I think if you think the Fed is hawkish, you want to be long dollar Norway, or dollar short Aussie dollar, or dollar ruble, something like that. But I think those are going to really move. And
South Africa's had a crap ton of problems recently, especially with domestic issues. I actually really want to be long the U.S. dollar, South African rand, while we're above the 200-day moving average. So if we have a dovish a hawkish Fed, I'm probably going to buy some dollar South African rand too.
Yeah. Personally, I one of the reasons why I would like the Fed to be hawkish is so that we can see some better levels in Euro Norway and dollar Norway that I really want to short.
Two-way price action, wouldn't that be nice?
Yeah, that would be great. We haven't seen this in ages.
I know.
So, and if we see that, if we see the dollar spiking, if we see yields going higher, equities have to go lower. I know we've said this for months and probably years now, but they have to go lower at some point. How much lower? Good question. I think the central banks are very well prepared now. If we do see a correction, if we see 20, 25%, they're going to step in again. They are going to. So any correction in equities shouldn't be very, obviously, unless the world is falling apart in general, if there's a third world war or something. But any correction, I think, is going to be a buying opportunity. And I think the market knows that. That's the problem. So everybody tries to front run everybody else. We're already down 10%. I think it's only going to go a little bit. Let's just buy now. So that's a problem.
That is.
Yeah.
All right, man. Well, I appreciate your comments and your thoughts, and guys and gals, good luck today. But like I said, I'll be back for the daily roundup. So do you have any other last comments for these folks?
No, just manage your risk. I'm taking a punt. If you take a punt ahead of the FOMC, make sure you know what your risk is and you know how much you can lose. And that's what I'm doing. And be careful in general.
Yeah. All right. Now, everybody, be cautious today. I'll see you on the daily roundup in about 3 hours. Shoot, I don't know when I come on.
It's
2.5 hours.
2.5 hours. Yeah.
Jeez, gosh, I feel like I've been talking forever. Okay, I'll see you in like 2.5 hours. You guys have a great one. See you then.
Thanks, Blake.
Thanks, guys. Thanks, Del.
Bye-bye.